All right, so you guys saw the title of the video. I'm about to be breaking down this Asia session trade that I took, and I did make a big mistake in it, as you could see here, right? So I went short on 13 contracts, and I only got filled three at my take profit level. Then the price started retracing, and I was forced to take out the other 10 in like a worse spot. So still in profit, but just at less of a profit, right? 8, 13, 20, 8, 13. So it's up here about, right? Instead of the 801 that I wanted to take it out at. So first, before I break down the trade and I'll tell you guys the mistake and how to fix it, I'm about to be showing you the broker statements just so you could see the legitimacy of this trade. So as you could see, November 19th, 2024 is when I took the trade. It's an Asia session trade, right? So total profit, 1,890, two winning trades, but it's actually one. It was just because I got filled twice, the three contracts and then the 10 contracts. The number of winning contracts, 13. And it says number of contracts, 26, but it's because I sold the 13 and then you buy them back. So that's like the whole point of that. Then you can see average trade time, all this stuff like this. If you want to pause to see anything, you could, but cumulative P&L. So that's basically the 990 from the three contracts plus the 900 from the 10 other contracts that I took out later. Then, yeah, P&L distribution, all this. I'm gonna scroll down for this, so you can see the entry time, the sell time, the duration. So you can see the three contracts. It hit my TP at 6 minutes, but then the full trade played out in 27 minutes because I had to take it out early. So yeah, now I'm about to be breaking down the trade. I already have it set up here, but since it's a trade breakdown, I'm about to be showing you guys how I set it up. Oh my god, yo, these ads, bro. But yeah, so let me break this down. So first, when you're trading Asia session, you want to mark out 6 p.m. to 7 p.m. That's the time where you're going to find the liquidity pools that you're going to be aiming for, and you're also going to mark out the new day opening gap. So how to do that, right? The lowest point at from 6 to 7 is, and that's Eastern Standard Time, right? 6 to 7 p.m. So you see the lowest here. It's what is it? Or no, you guys could read the low point of that candle for, bro. I can't get it stuck on it. Oh yeah, the low point is 20,754. So that's what you would mark out. Then the gap, which is there's not really a gap, so this is probably not the best day to show you how to draw a new day opening gap. But I'm gonna move this for a second, and this is how you would draw the new day opening gap. So you see market closes at 4:59. 4:59 is messing me up with this time. So 16:59 is 4:59 p.m. So you'll mark out that point. When market opens, right? That's at this point here. That's at 6 p.m. So you'll mark out that point here. This is your new day opening gap. A lot of times, Asia session will trade around this, so you could use the new day opening gap as targets. But in this case, it didn't. You'll see that like soon because it actually ran up way higher than that. So this is not really useful. But you still should mark it out. You should get in the habit of marking it out. Next, obviously, buy side liquidity. So the highest point between 6 and 7, you see here, you could read the candle's high, 20,787.75. So you mark that point out also, right? Now, you wait for this either sell side or buy side to get taken out. So in this case, buy side liquidity got taken out. Okay, we're looking for shorts automatically here. But before we find a short, we have to wait for a break of structure to the downside, right? So we can see here, there's a little retracement. We see another retracement, but not a break of structure, right? We didn't get a definitive break of structure. Like I see people talking to me like, "Oh, this isn't this a break of structure, right?" And then you get, well, in this case, you wouldn't get stopped out, but like, no, I wouldn't consider this a break of structure because it's such a little like thing that anything can happen. Asia session, remember, it has not as much liquidity, so you have to be really careful, and that leads into the mistake that I will describe soon. So it's due to the liquidity or the lack of liquidity in Asia session. So anyways, we wait, price comes back up, and now boom, displacement. That's speed, right? We get speed and a lot of red candles, big red candles going to the downside. Pause on that, bro. Not in a gay way. Big red candles just saying like, bro, like negative price action or whatever. Bro, price action to the downside. So then we break structure right here, right? Retrace into this fair value gap, which is near the breaker, right? That's how you know which fair value gap is valid. Well, you could take it off this, let's say, and then you could have a higher stop, right? But then your target is only here, so you wouldn't be like, would it be like the best, most optimal? No, it would be near the breaker, right? So price retraces it. I enter always consequent encroachment of the fair value gap, or if the breaker, let's say, let me give you an example here. I'll make it Nice. Let's see. Do I got the drawing tool, bro? I gotta get the drawing tool out. Haven't whipped that shit out in a while, bro. No homo, bro. But anyways, um, so let's see. Oh damn, that's way bigger than I wanted to draw. All right. So breaker. All right. Let's say this is where the breaker is, and the low is here, and then your fair value gap is still at this point. You would enter not at consequent encroachment, but you would enter at the open of the fair value gap because sometimes it won't reach all the way to consequent encroachment because it's already hit the breaker and the fair value gap, right? So I like to look at it like the second closest point. So it's the 3 points they could be are the open of the fair value gap, the consequent encroachment of the fair value gap, and the breaker. In this case, the second closest one is the consequent encroachment. So you would enter there, right? So you get the most optimal entry. So enter there. My stops are above the fair value gap right here. Boom. Sometimes it should technically be above the breaker and the fair value gap, but in this case, that would leave you with a horrible risk to reward, right? So you wouldn't actually do that. Well, it actually wouldn't be that bad of a risk to reward, but it would be like a 1.64. But no, if you bring it down, so you get like a 3, I'm pretty sure. Yeah, it was like around a 3 risk to reward here. So that's a way better. Obviously, you have to do it case by case, right? So entered here, right? Price does a little bit of consolidation. This is a 1 minute time frame, so that consolidation is literally 4 minutes, so it's really not that deep. But anyways, then we get a move down directly. You think you hit TP, but like if you just mark it out right at the low here, you could read it. By the way, when I say read it, it's at the top right here where I'm putting my mouse. So if I'm on this candle, the low is 20,875, right? And the price only reached down into 20,801. So that's one tick away from there, right? But luckily, I had mine one tick above the one tick above the target. Or actually, it doesn't. It's not. I say target, but it's basically the liquidity pool that you're chasing, right? So like it happened literally again here, but it's not really a target. But like just so you could see, it was like one tick away again, right? So this is what happens in Asia session because there's not as much liquidity. So it doesn't always like run through your target like it does in New York session. So you have to be really careful. They say like my mentor even says, well, my past mentor even said it was two or three ticks away. That's what you should do from your target, right? To be safe in Asia session, right? I only put it one because, bro, I'm greedy. I want that three. It looks so beautiful. Three risk to reward. Let me get that real quick. But no, if I just moved it one tick up, I would have probably got fully filled. And then, bro, I keep saying pause moments, not fully filled. Like my order would get fully filled, and then I could go one more up, and then you would definitely guaranteed to get fully filled. But it would be 2.91 risk reward instead of a three. So you could do that, right? Like you could put a 3 or 2, but just mostly be careful because you'll see price will go all the way down, and if it starts reversing in Asia session, you should probably be like like wary about that, right? You should like always have it to one like sorry, you should always have it 2 or 3 ticks above your take profit, right? Above the liquidity, right? So here you can see I would have had a 2.96 if it was 2 ticks above. And if it was 3 ticks above, I would have had, it was a 2.91. You guys saw it before. Yeah, 2.91. Right? So that's where I should have got filled, but I was greedy and I was looking for a 3. See, if you were even more greedy than me and you put it exactly on the line, you would have a 3.04, but you wouldn't have got filled unless you kept it and you weren't scared all the way up to break even. Let's say if you moved it to break even, you would have got stopped out. So all this was for nothing, right? But yeah, you would eventually hit take profit, but that's not the point, right? The point is that a lot of times it'll reverse from this point, and that's why I took it out here because I'll tell you guys why I took it out actually. Because we could see a market structure shift in the other direction. So look, price closed above this the highest point of this wick. So that shows that the market is looking bullish now, right? So as soon as it went here, I'm like, okay, I have to take it out. I want to take some of my profits, right? It was still like almost $1,000 in profits that I didn't want to lose. So at this point, I took out profits like it was at 813. I'm pretty sure the screenshot said. So that's like literally basically up here, yeah. So that's like not obviously in hindsight. Oh, bro, you should have just kept holding, and it would have went back down. Then it would have went back up, and then all the way down. But in reality, you should if it's a break of structure in the opposite direction and you're already in profit. I don't think you should keep it held because that's like very likely that it's going to reverse on you. Especially like I'm saying that, especially when it's basically reached your take profit. That means like okay, price actually fulfilled like your goal, but then it actually started reversing, right? So basically, the lesson in this video is to realize that Asia session has less liquidity than New York session and London session, and you should be very wary when you take your take profits, and you should put it 2 or 3 ticks above your take profit level or the liquidity, right? Because just to be safer, and how I visualize it in my head is like, okay, there's definitely less stops in Asia, so it has to take out way less stops. So it doesn't have to go as deep to take out the deeper stops, right? So because you know how they call it, ICT calls it a stop hunt, right? In this case, you're taking out most of the stops by going all the way here, and now Asia session could like return back to bullishness, but in this case, it went bearish again. But you know, you get the point. So it could start reversing from that point on, right? So this is basically an advice for Asia session. In New York session, you put it basically at the liquidity because it should run it through. A lot of people even put it above, but me, I put it right at the liquidity level. So it would be like, let's say here, right? Because I'm targeting this, it would have been here, right? But in Asia session, 2 or 3 ticks above. That's basically it for the video. You guys saw the broker statements to show that it's legit. 1,890 in profit. It could have been a lot more. I have it in the title. I'm pretty sure it could have been 4,000. I don't know, something like that, because I guess it was a $1,500 risk on this trade, so it should be about 4.5K minus fees, minus all of that. But yeah, so I did lose technically a lot of potential gains, but I ended up making the money anyway. So I have to be grateful, and I just have to use this as a learning experience, and that's what you guys should do too. Don't go on tilt after a loss. Just learn from your losses, backtrack it. As I said in the other video, look at my back testing files. I have so many. Like I still have the ones from the last video all listed here, but I have so many more on my computer, and that will help you be confident in your strategy, and it'll make you remember all the mistakes you made, all the good things you've done, so you could keep doing the same thing and keep improving on your trading. Anyways, guys, I'm about to be posting more videos about probably New York session, also an Asia session, but ask me any questions you have in the comments, and I'm gonna see you guys later. Peace, boys.